Hello, everyone. Welcome to the market opening bell on Wednesday, April 30. Yesterday marked the final trading day for April futures, and Hong Kong stock continued to be range bound, lacking clear direction. The Hang Seng Index opened 101 points higher, dipped 53 points early to a low of 21,918, and later rebounded, rising as much as 241 points to 22,213. It closed up 36 points or 0.2% at 22,008, with turnover increasing slightly to 177.6 billion Hong Kong dollars from 169 billion Hong Kong dollars the previous day. The HKF index fell 12 points or 0.15% to 8,068, while the Hang Seng Tech Index rose 31 points or 0.6% to 5,020. Technical analysis: the Hang Seng Index daily candlestick chart showed a bearish doji star for 5 consecutive days, indicating a market in a state of transition, with investors remaining cautious. If the index continues to retrace 61.8% of this decline, the target is 22,730. However, with the 9-day relative index at around 54, reaching this target may be challenging. Investors should watch for increased pullback pressure post-settlement. A break below 21,600 could signal further weakness. Mainland Chinese markets closed slightly lower. The Shanghai Composite fell 2 points to 3,286, and the Shenzhen Component Index dropped 6 points to 9,849. Total turnover in Shanghai and Shenzhen markets was 1.022 trillion yuan, down 34.2 trillion yuan, down 34.2 billion yuan from the previous day. The renminbi central parity rate rose to 7.2029 against the US dollar, up 14 pips from the previous day, hitting a 3-week high and marking 4 consecutive days of gains. Yesterday was a major earnings day for financial stocks. HSBC Holdings released its first quarter results at noon, reporting an underlying pre-tax profit of 9.8 billion US dollars, exceeding expectations, driven by strong foreign exchange and wealth management income. HSBC announced a share buyback program of up to 3 billion US dollars and a first interim dividend of zero point 0.1 US dollar per share. It reiterated its target of achieving an average return on tangible equity of approximately 15% annually from 2025 to 2027. For Q1 2025, the annualized ROTE was 17.9%. The four major state-owned banks, ICBC, CCB, ABC, and BOC, released their first quarter results after market close. Only Agricultural Bank of China reported a 2.2% year-on-year increase in net profit attributable to shareholders, while the other three saw declines ranging from 2% to 4%. ABC's first quarter revenue was 186.7 billion yuan, up 0.3% year-on-year, with a non-performing loan ratio of 1.28%, down 0.02 percentage points. Among the four, ABC is our top pick. Among domestic insurers, China Life, PICC, CPIC, and New China Life also released first quarter results. CPIC performed the strongest, with net profit soaring 92.7% year-on-year to 11.3 billion yuan, driven by a 2.692 billion yuan increase in total investment income to 7.464 billion yuan. Among domestic insurers, CPIC is our top pick. PetroChina and CNOOC also reported first quarter results. PetroChina's revenue fell 7.3% year-on-year to 753.1 billion yuan due to reduced market demand, lower refined oil sales, and declining prices for some products. However, increased domestic natural gas production and sales, effective cost control, and reduced tax expenses boosted net profit attributable to shareholders by 2.3% to 46.8 billion yuan. CNOOC's first quarter revenue decreased 4.1% to 106.8 billion yuan. mainly due to a 7.7% drop in realized oil prices to 72.65 US dollars per barrel, though higher oil and gas sales partially offset the impact. Net profit fell 7.9% year-on-year to 36.5 billion yuan. Among the three oil majors, PetroChina is our top pick. Companies reporting earnings today include Hong Kong Exchange and Clearing, Yum China, Prada, Zhejiang Expressway, and Datang Renewable. U.S. Commerce Secretary Howard Lutnick stated that President Trump will sign an order allowing automakers producing cars in the U.S. to be exempt from a portion of the newly imposed 25% auto tariffs, giving them time to relocate their parts supply chains back to the U.S. Lutnick also noted that the government has reached its first tariff agreement with a trade partner pending approval from the partner's prime minister or president and Congress. He believes the partner will soon formally ratify the agreement. Market optimism about progress in trade negotiations, combined with weak U.S. employment and consumer confidence data, increasing the likelihood of Federal Reserve rate cuts, drove U.S. stocks higher on Tuesday. The Dow Jones Industrial Average closed up 300 points at 40,527. The S&P 500 rose 0.6% to 5,560, and the Nasdaq gained 0.55% to 17,461. The Golden Dragon China Index, reflecting Chinese concept stocks, fell 20 points or 0.3% to 6,980. Following the Trump administration's adjustment to auto tariffs, Ford Motor rose 1.35% and Tesla gained 2.15%. However, General Motors withdrew its annual forecast due to tariff uncertainties, leading to a 0.6% decline in its stock price. The White House sharply criticized Amazon for planning to display President Trump's tariff costs alongside product prices on its website, calling it a hostile and political move. Amazon clarified that it had considered imposing tariff surcharges on products sold on its low-cost platform, Hull, but not on its main website, and ultimately decided against implementing the plan. Amazon stock fell as much as 2.1%, but closed down only 0.2%. Other major tech stocks generally rose, with Meta up 0.9%, Microsoft up 0.7%, Apple up 0.5%, and Nvidia up 0.3%. On economic data, the Conference Board reported that the U.S. Consumer Confidence Index for April dropped 7.9 points to 86, marking its fifth consecutive monthly decline and hitting the lowest level since the COVID-19 pandemic began. The expectations index fell 12.5 points to 54.4, the lowest since October 2011, well below the 80 level that typically signals an impending economic recession. Additionally, job openings fell to 7.192 million, also a post-pandemic low. Our stock pick today is Bloks Group, stock code 325. Bloks Group primarily engages in the design, development, and sale of assembly character toys and brick-based toys. Through a vast array of SKUs, comprehensive price segmentation, and a rich portfolio of intellectual properties (IPs), the group has built an extensive product matrix. The group collaborates with approximately 50 well-known IP franchises, including Super Sentai, Anime, Ultraman, DC Superman, DC's Batman, Harry Potter, and Star Wars. Its self-developed IPs include Magic Blocks, aimed at children's development, and Heroes Infinity, themed around Chinese culture. In 2024, the group further expanded its price segmentation coverage by launching the Transformers Galaxy version Defender with a suggested retail price of 9.9 yuan per piece in the value price segment. to increase SKU variety. As of December 31st, 2024, the group achieved a diversified product portfolio with 682 SKUs, including 132 SKUs targeting children under 6 years old, 519 SKUs for consumers aged 6 to 16, and 31 SKUs for those over 16. Among these Ultraman Transformers, Heroes Infinity, and Kamen Rider are the group's top four best-selling IP product series. In addition to China, the group sells products in overseas markets. In 2024, it established subsidiaries in the UK, Indonesia, Malaysia, and Singapore to expand its international presence. Overseas sales revenue in 2024 surged 518.2% from 10.4 million yuan in 2023 to 64.2 million yuan, with Indonesia and the US being the top two revenue-generating countries. Looking ahead, the group will continue to enhance its R&D capabilities in product design and development while strengthening product production technology, toy assembly structures, and toy connection mechanisms. It will also seek out popular IPs to complement its current product offerings and further expand its target consumer base. The group plans to invest more in sales and marketing, particularly in content-driven marketing activities, to boost brand and product awareness in China and overseas markets, especially in the US, Europe, and Southeast Asian countries such as Singapore, Malaysia, and Thailand. Recommendation: buy at 133 Hong Kong dollars with a target of $150. Stop loss at $125. I do not hold the above stock.